So talking of deposit, I mean, once you've got all that information and it's looking okay, what sort of deposit do the banks currently require? And I know we've got the first home buyers versus the existing home. So let's look at the first home buyers.
Okay, so for first home buyers, relatively lower deposit, we call it high LVR or loan to value ratio. So if we work in reverse, if you've got a 10% deposit, there are some options for you. They generally sit with your current banking relationship because that money is exceedingly limited, and banks are regulated by the government and others in regards to how much they can actually lend out in that space. There are some 5% loan options available. They're underwritten by the government and they are even slightly more difficult. I don't want to be negative about it, but you just have to go through a little bit more process. As soon as you go under 20% deposit though, it does become more expensive to borrow money, so the bank will pass that on to you. Higher interest rates, you'll require a valuation. There may even be fees in some instances.
Okay, so that's for the first home buyers. I'm an existing, say, mortgage holder, and I'm looking at upgrading my property. Do I need a 20% deposit in that instance, or should I aim for 20% anyway? Is that
ideally you should? If you've owned a property before, ideally you should have 20%. There are some options around there, but they fall into that high LVR assessment category, and there's no rhyme nor reason to some decisions by the bank in that. 20%, yeah, seems like a lot of money, but if you've owned a house previously and you're selling, you generally do have somewhere around that 20%.
Okay.
Right, so there are a number of different loans, as you're well aware, fixed versus floating or variable, offset loans, revolving credit, they all become quite confusing, and
very confusing.
Banks generally use anagrams, little letters and numbers, so it becomes more confusing.